Everyone is taught the same story, that governments control money, that elected officials decide how much exists, that national currencies belong to nations. That story is comforting. It's also wrong. Because if governments truly controlled money, they would never beg markets for permission to spend. They wouldn't collapse from debt. They wouldn't fear interest rates. And yet, they do. So here's the real question. One almost no one asks. If governments don't own the world's money, who does? The answer isn't a single country. It isn't a secret cabal ruling from a dark room. It's something far more powerful, a system. And once you see it, you can't unsee it. Let's rewind. For most of human history, money was simple. Gold, silver, physical objects that existed whether rulers liked it or not. Kings could tax it, they could steal it, they could debase it, but they couldn't create it out of nothing. That limitation mattered, because power has always followed whoever controls creation, not ownership. The moment money stopped being something you found and became something you issued, the balance of power shifted forever. The first major shift happened quietly in 1609 in Amsterdam. The Dutch Republic was exploding with trade, ships, empires, global commerce. But their money system was chaos. Hundreds of coins, clipped edges, inconsistent values. So merchants created a solution, a bank that didn't trade money, but recorded it. You deposited metal, you received numbers in a ledger. Trade stopped depending on coins and started depending on trust in the ledger. That bank wasn't run by the people. It wasn't controlled by parliament. It was controlled by merchants. That was the moment money stopped being physical and started becoming abstract. And abstraction is power. A century later, England took this idea further. The crown was broke. War with France was bleeding the treasury dry. Private financiers offered help, but at a price. They would lend money to the government if they could create a permanent institution to manage the debt. That institution became the Bank of England. Here's the trick most people miss. The government didn't own the bank. The bank owned the government's debt. From that moment on, England didn't fund wars with taxes alone. It funded them by borrowing from a system that created money in exchange for interest. That interest never disappears. It compounds, which means governments don't escape debt. They live inside it. By the 1800s, this model had spread across Europe, and one family understood it better than anyone. The Rothschilds didn't rule nations. They didn't sit on thrones. They financed them. They operated across borders, currencies, and wars, lending to kings who hated each other, betting on outcomes before the public even knew results. Their real advantage wasn't gold. It was information speed. Because whoever knows first, moves first. Governments reacted, bankers anticipated. That pattern has never changed. Now fast forward to America. The United States was founded with deep suspicion of banks. The founders feared centralized financial power. But fear doesn't stop crises. In 1907, the U.S. financial system collapsed into panic. Banks failed, markets froze, people lost everything. And who saved the system? Not Congress, not the president, a private banker. J.P. Morgan locked financiers in his library and forced them to rescue the system. America learned a terrifying lesson that year. When money breaks, governments wait. Banks act. That crisis created the justification for a central bank. But Americans would never accept one openly controlled by bankers, so it was designed in secret. In 1910, a group of powerful financiers and politicians traveled under fake names to a private island. No press, no public debate, no voters. There, they designed the blueprint for the Federal Reserve. And 3 years later, it became law. Here's the illusion. The Federal Reserve looks like a government institution, but it doesn't belong to the government. It doesn't answer to voters. It doesn't depend on elections. It controls the cost of money, interest rates, which controls everything from housing to jobs to wars. Governments don't command it. They negotiate with it. And once the U.S. adopted this model, the rest of the world followed. After World War II, global finance was redesigned again. Bretton Woods. Officially, it was about peace and cooperation. Unofficially, it locked the world into a system where the dollar sat at the center, backed by gold. That worked until it didn't. By the late 1960s, America had printed more dollars than it could redeem. Foreign governments noticed. They demanded gold. So in 1971, the U.S. ended the gold standard. Overnight. No vote. No referendum. Money became pure trust. And trust is fragile. From that moment forward, money wasn't backed by metal. It was backed by debt. Here's the key truth most people never learn. Modern money is created as debt. Banks don't lend existing money. They create new money when they issue loans. That means every dollar exists because someone owes it back, with interest. But the interest isn't created, which means the system requires perpetual expansion or collapse. So who owns the money? Not governments, they borrow it. Not citizens, they work for it. The real owners are the institutions that control creation, credit, and settlement. Central banks, commercial banks, global financial plumbing. At the very top sits a quiet institution most people have never heard of. The Bank for International Settlements, a central bank for central banks located in Switzerland. Closed-door meetings, legal immunity. This is where monetary policy is coordinated globally, long before headlines reach the public. Governments attend, markets react, and citizens adjust after the fact. Today, the system is reaching its limits. Debt levels are mathematically unpayable. Currencies are losing purchasing power. Trust is cracking. So the system adapts. Again, digital currencies, programmable money, centralized control with unprecedented precision. And once more, the design is happening quietly in committees, not parliaments. So when you ask who owns the world's money, the answer isn't a country, it's not a president, it's not even a family. It's the architecture itself, a system designed to survive governments, outlast voters, and concentrate power through control of credit. Understanding this doesn't make you paranoid, it makes you informed. Because history doesn't punish ignorance gently, it punishes it suddenly. If you want to understand how power really works, not the stories we're told, but the systems underneath, subscribe. Because money doesn't rule the world. Those who design it do, and the rules are changing again.